Hey traders, this is Thomas. Welcome back to my channel. In this video, we're going to go through how to use price action rules to help us identify high probability setups. Now, when I trade, I always ask myself a question: what is the current structure? What is the bias? And this is the structure before the regular US stock market open, and we can see that the structure is a healthy trading range. Why this is a healthy trading range? Because price is bouncing from the highs, heading to the lows, and from the lows, nicely pushing to the highs. So there is no imbalance, bullish or bearish, and trading range is nice and full. You guys can see I'm drawing my shortened trend lines. I'm not really particularly looking for any wider channels because I want to follow the trend line rule. I want to follow the break and the new extreme, and you guys can see how price action is reacting to these extremes, because according to price action rules, we want to trade ranges buy low, sell high, and scalp. Now, take into consideration this overnight high, as it will come into play later on. And before you start trading, you always want to make sure you at least eyeball where the overnight highs and lows are, as they will come into play later on throughout the day. Sometimes they will, sometimes they will not, but it is important to always have a sense or idea where the overnight highs and lows are, because a lot of times during the day, they can give you an important information about the market. Now we can see that the market is coming from the resistance and is pushing way down. So naturally, the first thing I do, I try to find some form of a channel. There is a break of this channel, and there's a first leg to new extreme, second leg to new extreme. Now, when I'm watching this, I consider this downtrend over, and I'm right now focusing on the trading range rule because I'm at the bottom of this trading range. So I expect for price to push higher back into this resistance. Price pushed above the support, and we have a higher low, but this higher low is going long directly into EMA. So this is not particularly the safest entry. I'm waiting for a reversal pattern. I'm waiting for two failed attempts in the previous trend's direction, which was bearish. So we have a new low, and price created the first entry short, pull back, second entry short right here, failure. But notice there is no trigger above this bullish bar. Had there been a trigger, I'm anticipating to go long here because I'm anticipating a failed second entry short reversal pattern. Remember, I'm playing the range rules, so I expect for price to go from here all the way up to here. And notice what happened. A little change in momentum, which price pushed lower, consolidated, and is trying to push higher. And notice price created a small little trading range. Notice this is how we use EMA. Once I see EMA pointing down like this, I treat it as a downtrend structure, and at this point on, EMA is starting to get flat. And notice when the EMA is exactly in the middle of these bars, this is the worst type of congestion there is in the market, and this is particularly exactly in the middle of these bars. So you guys can see I'm drawing my resistance, I'm keeping the support, and this is a shortened trading range, and this means I'm not taking any entry. I don't want to be guessing because it is tempting to both buy and sell at the same time, and this is particularly not the place where a high probability setup is going to appear. So I cannot take an entry here, and I cannot mess around with it here. But this gave me important information. Once market pushed below the support and it turned down and sold off, this indicated a bearish imbalance, because if I'm going to copy this resistance and I'm going to put it at the middle, price is failing to reach even the midline, even the middle of this trading range. And this is a huge tell, because in a healthy range, you guys can see price is oscillating between two extremes, and here it is failing to even reach the midline, let alone the upper half of this trading range is completely empty. So this is indicating a bearish imbalance. And once price is breaking lower like this, I expect for this breakout to eventually work. I'm not even looking to fade, but more importantly, I'm going to draw a channel that is going to look something like this, because these channels are working. Price action and market geometry is a real thing, and this may produce a potential high probability setup. Okay, this is the key entry point where all the magic happens. So I'm going to use this swing and this second swing right here, because this is the point where eventually the second leg started. This is the first major bearish leg, so I'm going to measure it, copy it here, and this is the second bearish leg. This is the measured move where I expect the target. The downtrend was so strong that we eventually overshot it. So as the price is right now pushing lower, I stick with the trend, which is bearish. You guys can see EMA is now pointing down, and this downtrend is starting to be valid. It's starting to get confirmed. Why? Because if this downtrend is not correct, we're probably going to reverse back into trading range somewhere around this area. But the stronger you push below, the stronger the downtrend is, the more you're anticipating that this downtrend is valid. I'm keeping it simple, looking for second entry shorts at the key entry points or failed second entry long. Price created a new low, only a first entry short, I'm not interested, it's even far away from EMA. New low form, first entry short, second entry short. So this is a two-legged pullback with the direction of overall trend at the key entry point, at the 21 bar exponential moving average. So this is the second entry short under right context, this could be considered a high probability setup. But why it's not high probability setup? Because I have a shortened trend line is in play, and this shortened trend line is indicating that this bullish uptrend is still working and it needs to play out. So when I was watching this, I skipped this entry right here, even though you could have probably sneak in and get your quick easy scalp. It's not worth it to break the rules. The safer way for you to play is wait once this bullish correction plays out and there is a break, new extreme form, and notice where the new extreme form, it formed directly at the key entry point, which you would identify here, and this is the third confirmation. These two swings set up the trend line, this third swing confirm it, and take a look how perfect price action simple is. Nothing complicated, no complex set of indicators, pure simple price action, pure simple trend line will give you an idea where the price will turn. And here you have two key entry points, EMA and trend line running together congruently. This gives me a more confidence in the setup I'm about to enter and the execution. And this was my first trade for the day, a double trap. Why is this double trap? Because everybody who went short on a second entry short, they got trapped. They went short too early because the shortened downtrend is in play. Everybody who went long, thinking that everybody who went short here got trapped, they're going long against the trend. Trend is down, so they got trapped as well. So, and notice the signal bar. Now, when I want to sell below nice bearish signal bar, okay? And there are two types of signal bars that I want to specifically sell below. I either want to sell below full bearish trend bar like this with the full bearish body, or with the reversal pin bar like this. This bar was full bullish bar, and at the end of the bar, everybody started selling, which is indicated by the bullish stem at the top, and the body is still bearish. So this is a great signal bar indicating strong momentum, and this is great setup. First trade for the day, you guys can see my runner was hit as this bar retraced back. There's a little break, there's a new extreme, and there's a second entry short. But this is not a great entry. Why? Because it pushed above EMA. If I'm taking an entry that is above EMA, it needs to be off the trend line. Here, I don't have a trend line. So when I see this second entry short, which still makes sense because this is the first break of the downtrend, and according to price action rules, trend line rules, I expect new extreme. I'm looking to go short. Yes, I am. But since this is above EMA, I cannot pull the trigger just yet. There was additional double trap, but it has no trigger. Then it kind of stacks up. Lower high, still above EMA, doji bar. You guys can see if you want to take lower high, you need to see bearish bar. You want to see preferably push below EMA. No high probability setup right here. So you have to be patient. You have to wait for price to confirm bearish momentum once it pushes below. And once it's pushing below, okay, now I'm expecting failed second entry long, new high, first entry long, second entry long, failure, no trigger here. You get trigger here, but it's inside bar bullish doji, so you cannot sell below this bar. And then you have a new low, first entry short, second entry short. Notice the shortened uptrend with a little break, new extreme formed, and you're at the key entry point. You're with the direction of overall trend, and you expect new extreme according to trend line rules. I only marked it if you had better signal bar. This signal bar is close because it has a good bullish stem, indicated that a lot of people started selling. But at the same time, it has a one tick bullish body. It has a little stem at the bottom, a little bit neutral bar. Like I said, I want to sell below these bars or preferably these bars. So only if you had better signal bar, this is a great second entry short. And another two-legged pullback. Notice you're only interested in the form of a two-legged pullback. Then price created break, but now you're way too close to these lows. Here you have room to this swing right here. If you guys take a look, you have room to scalp here. Here you're at the very low. So you're not interested. At this point on, price created new extreme, and according to trendline rules, we expect correction or possible reversal. And there it was, another double bottom, strong reversal up, and this looks like a trading range because price is swinging up and down, EMA getting flat. At this point on, it's starting to get a little bit confusing because uptrend has strong bullish momentum, there's a break, there's a no new high, and there's a back push below EMA. I was watching this lower high, but your stop loss has to go above this bullish bar right here, and you're entering at these lows, so this is really big, so this is not the great entry. I kind of like this lower high because you're pulling back into trading range, but it just got a little bit confusing here because price action reversed back up above EMA and strongly shot up higher, so got a little bit tricky here. But mostly you're probably expecting reversal because you have a double bottom, new low, and strong push above EMA. You have a new low, first entry short, second entry short, which is tempting, very tempting if you're focusing on the bullish bias. I unfortunately wasn't really paying attention to the bullish bias here. I was treating it as a range. But this is now a failed second entry short. It's a little bit stacked, but you can definitely go long here. I will mark it as a slightly aggressive because sometimes these failed second entries, they will take a time to develop, so they may get a little bit congested. Sometimes it is natural because it takes time for people to get trapped on a second entry short. This is what it is. It's not really the particular congestion, it's just first entry short and you need to get the second entry short, you need to trap more people, and then it quickly reverse. EMA keeps holding price, and you failed to reach the bottom of this support here. There's a gap here, and it's such a strong push above EMA. Great entry. Unfortunately, I wasn't paying attention. I was still a bit leaning more towards the bearish bias. That was my mistake here. Now, price is strongly pushing higher, and this is indication that the momentum is changing. So as I'm watching this, I'm drawing my trend line. I'm drawing the trend line even for the opposite direction, because you guys can see I want to avoid getting trapped. Just like here, there is a break, new low form, and a second entry long triggered above a horrible doji bar, which you cannot go long. Remember, if I want to go long, I want to go long above, let's say, bar like this, it needs to show bullish momentum. This is indecision, stims at both sides, bearish body. I cannot go long above indecision. Take a look. You have a break of the uptrend, you expect to get new extreme, and also downtrend played out with the break and a new low. So since downtrend played out with the break and a new low, I know I'm safe to look for buys. And then you have a little jack lower. I marked it as a second entry long. It's technically like a higher low, but there's a micro double bottom, and the second entry long isn't still in play. It didn't get stopped out here. So for that reason, I'm marking it as a second entry long, and this is a decent entry, small risk. You have a break and new low, so the downtrend is over, and look what happened. Everybody who went short too early on a failed second entry long, their orders got filled just by one tick and it reversed on them. They're panicking now because they're caught on the wrong side of the market, because this uptrend needs a new high. This uptrend started all the way here, and the downtrend played out. So you cannot go short if this uptrend is in play, and you need to get new extreme, and the downtrend played out. So this is a great little trap. It happened so quickly, you would have to really enter quickly. Now, after that, the market got really confusing, because you guys can see EMA getting flat. We're starting to consolidate a little bit. I don't see any high probability setup. It's looking like a trading range. I don't want to go short because the uptrend is in play. I necessarily don't want to go long below EMA like this. I don't really want to fade the breakout just yet. I'm not really sure. When I was watching this, I was looking at the trend line like this. I was waiting for price to pull back to this key entry point to confirm whether the key entry point is valid. Because you guys can see, if you find proper trend line, it can produce a high probability setup. You guys can see we have a bounce, but it didn't really look too strong to me. I wanted to see high, low, or failed second entry short above EMA. None of that happened. So this is where you have to show your patience. If there is no setup you're confident about, you cannot force the entry, and your fortitude will get tested throughout an area that is going to follow, because price pushed lower. We created a break of this bigger pattern, so you still expect new extreme once price is pushing above EMA. Price created a new high, and you have a first entry long, pullback, second entry long. You have a two-legged pullback at the key entry point, which is the EMA, and uptrends needs to get new extreme. This bigger one and this tighter one as well needs to get new extreme, because this is just a break and you expect new extreme. So this is the two-legged pullback. Downtrend has a break, new extreme. You have an attempt for new extreme, which is okay because EMA keeps holding price. You cannot go long above this signal bar. This is a bearish signal bar. There's a little stim at the bottom, but that's not convincing enough. You cannot go long here. Once again, you need to see bullish bar preferably, or some variation of a bullish bar. So you cannot go long here, and you cannot go long here, because at this point on, bar is too big and you'd be risking too much. So there is no setup right here. You have to watch the market keep going without you. Bias is bullish, but I was struggling to find a bigger pattern. I really couldn't find any decent bigger pattern. Like, nothing was really fitting perfectly. You know that the bias is bullish because EMA keeps pointing up and you just keep pushing higher from this bottom right here. So you don't want to keep even thinking about shorting. When you don't have the proper trend line, it gets a little bit confusing. I didn't take this trade, which was my mental mistake. And the reason why I marked it, even though we have a new extreme, is because this is a triple test. Double bottom, triple bottom, new high, first entry long, second entry long. This is a two-legged pullback, break and a new low of the downtrend. So you know that you're safe to go long. And you have two key entry points, this little support and the EMA is holding price. And this is the signal bar you want to go long above. I prepared my order, but I chickened out of this. This was my mental mistake. You guys can see trading is so mental, because if I was a robot, I'm supposed to execute here. I hesitated a little bit and market instantly punished me and took off without me, not even giving me a chance to enter on a higher low. But this is a good entry because I like the triple bottom right here. EMA is holding price, second entry long. At this point on, it got, like I said, very confusing. I'm really not sure. There's a potential uptrend working high like this. These uptrends after break and a new high of this bigger pattern generally are not so reliable. So I wasn't really trusting these uptrends. And I want to talk about this setup right here, because trader took this setup right here and he got trapped here. because it looks like 2 legs down, downtrend has a break and new low. I can see why you took it, and if you took this trade, you definitely didn't do that much wrong, because there are only a set of clues that can help you to stay away from this, because you are following the rules. You're with the direction of overall trend. It is a form of a 2-legged pullback. It is at the key entry point. So if you took this trade, not the wrong entry on your part. Notice how this trend is losing steam. This trend is only hugging this bottom trend line. You're failing to reach the top of this trend channel line, failing to reach the midline, and the trend is losing steam. It looks like it's about to tilt, and the uptrend is not so proven. I really don't trust none of these setups, but it is following the rules. So if you took this trade, one of those tricky setups that unfortunately just stop you out. But why I like sitting here patiently is trend is just starting to lose steam. It's just only hugging this bottom trend line. It's starting to waver. It looks like it's going to tilt, break at a new low, yes. But really, like I said, not particularly sure here, because I just don't have a bigger, wider uptrend. And notice this downtrend has a break new low. First entry short, push above EMA. You're expecting to get a felt second entry short. Reversal pattern above EMA. The structure is still bullish. You don't get it. You get it all the way up to here, far away from EMA, which is dangerous, so you cannot enter. And notice this is why you mark the overnight highs, the key level. This resistance you were able to identify very early, came into play this late, and you guys can see it indicated that the trend may reverse. So you guys can see how price action keeps giving you enough information just based on pure raw price action. Market push lower, even though we are at the top of this range. I'm not particularly looking to go short, because I cannot deny this entire bullish structure. If you zoom out like this, we've been working hard for quite some time, and to reverse just like that, not really the safest entry. You want to see a proven trend in opposite direction, and once you give a proven trend in opposite direction, then you want to sell a second entry short. So price created a new low and gave you only first entry short, then created another new low and you have first entry short, second entry short, but you have to go short above bullish bar, so you cannot go short above bullish bar. There was a bearish bar, but that's no entry. It's above EMA. Once price is pushing below EMA, you're expecting to get a lower high. You never get lower high. Price just strongly pushes lower and created 2 legs to a new extreme. So according to price action rules, that means that this downtrend is over. You're expecting reversal, which you get. I expected a second entry long at the EMA, never got it. I just got a V-shaped reversal. And once again, once price is pushing below EMA, I'm anticipating to get a lower high, felt second entry long, or eventually second entry short. None of that form. You have a second entry short here, but the short-term uptrend is in play, break, new low, no setup. So at this point on, it gets even worse. Strong push up, complete mess, complete congestion. You have a new extreme, but price, instead of reversing from a new extreme, it keeps working higher without any good setup. By the time I was watching this, I'm sitting here 3-4 hours without any decent setup, because last entry I took was actually this first setup right here, and this will really take a toll on you mentally. My brain was really like a mashed potato here. I really couldn't focus, and this is why it's important to keep monitoring your behavior. You need to keep taking small breaks, and you need to keep being refreshed. You cannot force the entry. Don't force staring at the chart, looking for entries. If you don't feel like it, if the structure is not rewarding you with good setups you're able to identify, don't force the entry. That's not your job. Your job is to execute on the high probability setups, and not to be gamble, and not to take entry on every single structure. Sometimes traders think that they need to find setup during every single market cycle and market structure. No, there are going to be situations, there are going to be periods of time where the structure is completely messy and completely unclear, and this is the perfect example. There's no setup. You guys can see I cannot even mark in hindsight a setup that I would really recommend. So you just have to be patient. We're coming from the range highs, pushing back below, and now we get a bearish momentum. So now I'm starting to think that the structure may get cleaner, because we have a bearish downtrend. Price created a new low, first entry short, tick higher, second entry short. This was my second and the last trade for the day. Looking back, this was aggressive. I took a chance here. I took it on an engulfing because it ticked higher, quickly reversed down, and I took it on an engulfing entry. It was quick, easy scalp on a second entry short. This downtrend needs a new low. EMA keeps holding price and is a 2-legged pullback at the key entry point. It was quite aggressive, larger scale, first entry long, second entry long, but at this point on, first entry short, second entry short, this second entry short gets too wide. Once the first entry short produces such a big lag, now it's starting to go sideways more. This is not a great entry. This is one of those hidden traps that it's called a wide second entry. Price push lower, only first entry, another first entry. But once you see price pushing lower here and you're all the way down way to here, you can find a possible trend line. You set up the trend line here, and third swing confirmed it. So at this point on, you have a bearish structure, you have an EMA pointing down, and you can see that each new high and low is lower than the previous one. EMA keeps rejecting price every single time. So this is when the structure got cleaner. Finally, according to rules, you're looking for two-legged pullbacks at the key entry point, and notice what you have. New low form, uptrend working higher, uptrend has a break and a new high indicating that you're okay to sell. First entry short, second entry short. Off the key entry point, great bearish reversal bar. Then you got a lower high entry. I wouldn't enter below this bar with a bullish body. I would wait for this bearish body. This is not the greatest signal, but it has a great stem, but those 3 ticks of a bullish body is a little bit concerning. But once you have this full bearish bar, this is now how you know that you close below EMA and you're safe to go short, because notice how these wicks are kind of confirming the trend line here, and this is the 4th confirmation of the trend line. So the trend line is really proven, closing below EMA, and the uptrend played out. High probability setup, new high, first entry long, second entry long, failure. And this is actually micro, new low, first entry short, second entry short at the same time. So 2 high probability setups in one, below EMA, and the trend line is holding for the 5th time. This is where all the magic happens, and this is what you're expecting to trade, and these are the setups that you want to catch. You don't have to overthink too much. This is not like structure here or structure here. This was very messy afternoon, but eventually price action got much easier to read. Actually get another first entry short pullback, second entry short, once again off the key entry point. Structure is bearish, you're following the rules. Notice that the uptrend broke the channel, so you're expecting to get a new low according to rules. This uptrend also has a break, new extreme, and by the way, you're not looking to go long on a second entry long. Why? Because bigger pattern is taking precedence, and the second entry long may fail. It worked here, but you have a new high, strong push below EMA, indicating bearish reversal that you're going to get extreme, and notice you have a textbook high probability setup. Price form a new extreme, first entry short, first leg up, second leg up, and a second entry short. Uptrend played out with the break, new extreme telling you that you're okay to sell. 2 key entry points are holding price. This trend line that you're able to find off these first 2 swings. Third swing confirmed the trend line. EMA, bigger pattern is telling you that it needs new low. Context is perfect. This is the easiest setup that anybody can spot, and it's a shame that you had to wait the entire day for a few of these easy setups. But like I always tell you, there are always 2 or 3 easy price action setups throughout the day that you can spot. Sometimes we just have to wait a long time. And even take a look at this gorgeous entry. Uptrend working higher, break of an uptrend, new extreme form telling you you're okay to sell, bearish bar, second entry short at the exponential moving average at the key entry point, and this downtrend needs a new low. And I wonder, do you have a new low? You just have a double bottom. And in such a strong downtrend like this, it's possible that you're truly going to get the additional leg down to truly create new low. So this downtrend needs a new low, this major downtrend needs a new low, and the perfect price action rewarded you, and the market strongly reversed higher. Don't forget to mark your overnight highs and lows, as they may come into play later on, just like they did right here. You have to remember that it's okay to sit on your hands when you're not reading it properly. Your job is not to find trade on every single market structure. Your job is just to sit back, wait for market to unfold in front of you. And when the market is unfolding and you are able to identify the structure, you're able to identify the key entry points, that's where you come in, and that's where you can capitalize on taking the high probability setups. You're not worried about all the other setups on the chart. They are aggressive. That's none of your business. Let other traders take care of it. So I hope you find the video helpful, educational, and I'm going to see you guys in the next one. Take care, everybody.